Are you thinking about a 50-year mortgage? Well, it might sound like a clever way to lower your monthly payment, but let me be real with you, you might think differently after watching this video. Hi, I'm Lyons with Baird Warner, and if you're serious about building wealth through real estate, not just buying a home, well, this is something that you really need to understand. You know, the 30-year mortgage has been around since the 1950s. It's been the industry standard. And today, about 90% of buyers use it because it's stable, predictable, and it's relatively easier to qualify for. But now the conversation is shifting and there's this buzz about the 50-year mortgage. Well, it's longer terms, it's lower payments, and supposedly more affordable. But here's the truth. I ran the math. Let's say that you're buying a $500,000 mortgage here in Chicago and you put 20% down. That's $100,000. That leaves you with a $400,000 loan. Option one is a 30-year mortgage at 6%. The monthly payment is a little under $2,400 a month. The total interest is $463,000. Option two is the 50-year mortgage at 6.75%, which is realistic. The monthly payment is $2,627, and the total interest over the life is $1.17 million. That's more than 2.5 times the interest, just to shave off a couple $100 a month. Look, banks love the 50-year mortgage. They collect interest longer and you build equity slower and you're locked in forever. And here's the kicker. Most Chicago buyers don't stay in their homes for 50 years. The average is around 12 years tops. And with that kind of loan, you're walking away with very little equity and a lot of risk if the market shifts. Here in Chicago, we have older housing stock, a lot of mixed price points, a high number of move-up buyers and investors. You know, the 50-year mortgages don't help you move faster. It keeps you stuck. Less flexibility to refinance, more risk of being underwater, harder to move up, scale up, or exit profitably. And forget retirement planning. This is a loan that follows you until you're 80. I get it, the affordability is tight, and rates are high and people want relief. But stretching your loan to 50 years is like signing a lifetime lease, and it's still owning the repairs of the home. It's not just wealth strategy, it's a long-term liability. So if you want to talk about a creative, smart ways to buy in Chicago, we'll do it with actual numbers based on your income, your goals, and your timeline. I hope this point's helped you. If I could be of service, my contact information is below. Thanks for watching.